A very good evening and a warm welcome to Personal Finance. I'm Guguletu Cele. Now, many people are packing up their belongings and embarking on a romantic rite of passage that has become a norm, moving in with their significant other. But some forget to inform their insurer of this decision or assume that their positions are covered by their partner's insurer. Abrie Janse Van Rensburg, Senior Manager for Claims Procurement at Alexander Forbes Insurance, joins us for more. Abrie, good to have you with us this evening.
Thank you very much for having me.
Maybe let's start on this concept of cohabitation so that people understand it fully. It's a legal term or a term that can be used legally. What exactly does it mean and which particular qualify for cohabitation?
Well, any people that stay together for a certain number of months, some say it can be 6 months, even more than 12 months, will be seen as people that cohabit with each other. In that case, they can even be considered in a certain sense as married.
Let's touch on the insurance element here because many people don't actually think about it. And I was also lost when I first encountered cohabitation insurance. But why would it be necessary? If you and I stay together, why do I need to ensure that my laptop and my other possessions are covered together with yours?
From a principles of insurance perspective, insurable interest plays a big part. So if you insure property, you pretty much must have a financial interest in that specific possession. So if two people are staying together and in real terms they aren't considered maybe spouses, they might find a situation where one person's property is not insured under the term insured person.
If that is the case, then what's the worst case scenario?
Worst case scenario is that either their claim might be reduced by a certain percentage. Alternatively, in more serious cases, their claims can even be rejected if there is a material non-disclosure.
Whoa. Let's take two steps back here. In other words, if you do make a claim, then the money you might get back from the insurer might be lower than what you anticipated. And the rejection, what kind of disclosure claims would you be looking out for there?
That's correct, yes. If there's a material disclosure that affected the risk of the property, an underwriter may decide that it was not in their best interest to insure this property up front, which means that they have the full right then to reject the claim. But again, I'm saying that's worst case scenario. In most cases, and we try to see how best can we accommodate the insured person, which means that if only a percentage of the items were stolen, that is the portion we settle.
Why can't we just assume that maybe the items between the two parties will be covered?
No, that's true. And that's sometimes how clients tend to misinterpret their policy documents. The big thing that they need to look out for is how is the insurance key terms put to them in their policy contract. Under the term you or insured person can be you as the policyholder, spouse or any family member who normally resides with you. If the person who's staying with you don't fall under these terms, potentially they might not be considered the insured person and their goods are excluded.
So it goes back down to the legality and what particular term is used in order to make reference to the other party.
That's correct, yes.
So if I want to make sure that I avoid some of these pitfalls, what do I necessarily have to do as someone who stays with Abrie and wants to make sure that our goods are covered together?
Best would be is to talk to your service provider and your underwriter, or they sometimes call them service consultants. They will advise you as best the terminology behind the policy, and when you disclose your situation to them with your true value of your property, they will then tell you that if your insurance cover that you have in place is adequate or not.
Is the terminology different from insurance company to insurance provider?
Yes, some of them do differ.
Why is that though? Shouldn't it be some kind of standard or industry norm?
I agree with you, definitely. Industry norm would be the ideal way, but rather be safe than talk to your service consultant.
What about costs? Because maybe that's what some people are running away from. Are there additional costs that are incurred if I add a partner with me into the insurance policy?
Not necessarily. It will all depend on the value of if we talk about household contents. If the value of the contents increase when another person moves in, then yes, it will impact the premium. If the person that moves in with you is also maybe considered a higher risk, there can also be certain endorsements imposed or premiums adjusted.
You say another person moving in. Now, we know three's company when it comes to relationship.
Yeah.
But let's say it's Gugu, Abrie, and someone else. What does this third party have to do with regard to the insurance policy if their assets are involved?
If they want to be insured under the same policy, they can either be noted as a co-insured under the policy. Alternatively, they will have their own insurance policy, but just insuring the portion belonging to them.
Let's get down to the nitty-gritty of the name here, because you're referring to the insured. Whose name should it be in? Does that also depend on maybe the situation with regard to the parties involved?
That's correct, yes. The name of the policyholder is quite important. If two people are living together, and again it doesn't fall within the definition of insured person, then best would be is to note both parties as the insured person. In other words, put both people's names on the policy, and then you at least have some form of comfort that both parties will be covered.
Something else you alluded to earlier was full disclosure and an honest representation.
That's correct, yes.
Walk us through that, because I think we often at times need to be reminded about this when it comes to insurance overall.
Each underwriter has a certain risk appetite, if you can call it that. When they consider a risk, and when I say risk, you're talking about your household contents, can be your vehicle insurance, even items that you take out with you when you leave your premises. An underwriter will then say, with information that's disclosed to them, is this risk acceptable or not? If it's not acceptable, then they have got the full right then to reject the application and say, we don't wish to insure you. Now,
even though I'll be paying for the service?
That's correct, yes. Because people tend to forget sometimes a good premium doesn't necessarily make a bad risk a good risk. So this is where it becomes a very delicate balancing act from an underwriting point of view to make sure that when we accept a policy holder, that we are comfortable with the risk that we are taking on board.
Let's touch on some of the assets that obviously need some kind of insurance cover between couples or people who are cohabitating. Are we just referring to maybe movable assets within the household, or are we also talking about larger scale assets like a vehicle or even household insurance overall?
That's correct, yes. Let's take it from a homeowner's point of view. If they insure their building, again, there might be an increase in risk because there's more people living under the same roof. So there might be cases where there might be further maintenance required to the home, or even a simple cover as accidental damage might occur more, which means is that the insurance company might then decide that because of the number of people in the house, accidental damage is not a viable option then to provide cover for. For motors is, for me, one of the most important things, because it pretty much depends on which cover you take out. Do you take out a named driver policy, a regular driver policy, or even an open driver policy? Each key term pretty much has got its own terms and conditions attached to it. And if you don't meet it, then you might find yourself on the wrong side of a claim rejection.
What about movable property, your laptops, your TVs and other household goods?
Most definitely. If a claim should occur, we try to look at who owns that specific item. And if the person who owns that item and has got a financial interest in that item is not a policyholder, potentially then, although the policyholder paid premium for it, they might not get that item paid out.
Let's repeat that again, because I think it's a key highlight that viewers need to be aware of. In other words, if you don't own the asset, but you are the person who insured the asset, if there's a shortfall somewhere, you won't get the full payout necessarily of that insured item?
That is correct, yes. There's two ways. It's either if average is applicable, and again it's another insurance term that says that if you haven't insured your property for the correct value for which it must be insured, then we apply the average calculation, and then you only get a portion back of what you claim for. But when it comes to insurable interest, even though you did pay premium, if you did not own that item or you don't have a material financial interest in that item, potentially you won't get paid out.
Sure. Well, let's get into some case studies here where we've got hypothetical cases that we've discussed or want to actually get your views on with regard to this. And that's time for us to dip into our case study jar. Let's get the first particular scenario, which says, my partner and I have adequate insurance for our items. The items are insured in his name and my interest has been noted. What happens should he die? Will the cover lapse or will the cover fall into my name?
What would happen is if a person do pass away, sometimes their accounts are frozen. Now, if the account caters for the premium that's collected monthly, potentially you might get a situation where premium is not paid, and either after a month or 2 months the policy lapses. Obviously, with the partner that remains behind, they don't always think of insurance first, so they might not realize that the policy has lapsed until a claim occurs.
And if it lapses, is there no way, maybe upon identifying the fact that your policy has lapsed, can't we again reinstate it or pick up on it? Again, just changing the name of now the insured from the deceased to whoever's living.
Well, that will be up to the underwriter again. They can either reinstate or reissue the policy. In other words, considering the circumstances, they might say to the partner that we will continue cover and you pay the back premium up to date, or we start your policy active from today in your name.
So in other words, there are no guarantees unless the insured products are under both of your names.
Unfortunately, yes, you're right. There are no guarantees, but what I can assure you is that each insurance company will try their utmost to see how best they can resolve each issue for a client or even a potential client.
Abrie, let's get one more case study just to identify what might be of interest here. My hand nearly got stuck in that jar. The next scenario refers to my girlfriend and I are both financially independent. Is it advisable for us to have two separate insurance policies in our own individual names? Will the double up on the cover make it easier for us to ensure that our goods are efficiently insured?
That's actually quite a good one. They will have to look at their own situation. If they are financially independent and they don't maybe foresee the relationship continuing the distance, best should be to have two policies. What we have seen in the past is where there becomes a domestic dispute and both partners split up, the one who pays a premium tend to not want the other person to claim against their policy, and it just becomes a mudslinging contest back and front.
So what do you do in a situation like that?
Well, at the end of the day, we take instruction from the insured person, but we try to, as best possible, have both parties come to some form of an agreement so that we can settle a claim.
What about the contributions that might have been made by the other party to the value of their assets? Does that mean that they forfeit whatever financial contribution they might have made to the insurance over that period?
Well, a premium is only collected from one account. So if they are financially dependent, I would assume it wouldn't have been a joint account. So potentially the person who is a policy holder and who paid the premium monthly would have the final say in how this claim should be settled.
One last question just to wrap things up. If a couple moves from being or having cohabitated and now wants to get legally married, does a follow-up process need to be made with the insurance company?
I would say, to be safe, do a notification to your underwriter. But in terms of most policies, the insured person is defined as you, the policy holder, your spouse, children who normally reside with you, including family members. So if they want peace of mind, they must just discuss it with their underwriter to see how their key term is defined.
Understanding the key terms. I think that's the biggest takeaway from this discussion. Abrie, such a pleasure having you with us this evening.
Thank you so much.
And that's it for Personal Finance this evening. A big thank you once more to Abrie Janse Van Rensburg from Alexander Forbes Insurance. Remember that we want to hear from you and hear about your financial situation. You can tweet any of your comments or suggestions to @CNBC Africa using the hashtag Finance410, or even to myself @Kukumfupi on Twitter. Till next week Monday, it's goodbye for now.